Hello, real estate agents, real estate brokers in North Carolina and beyond. My name is Russ Fitzpatrick. I've been a real estate agent since 1986, real estate broker since 1999, and been in the mortgage industry for 20 years. I'm excited to share with you the Renovation Real Estate and Lending Certification sponsored entirely by Hero Benefits Network, which is a nonprofit 501c3 that you'll hear about in a minute, and my passion at CMS Mortgage, solving mortgage problems for realtors all over North Carolina. We're going to get into the Renovation Real Estate and Lending Certification, but I wanted to share with you this example. Pretty little lady on the far left side of your screen is Joanne Gaines. Her husband Chip Gaines gained national fame as America's sweetheart couple with a show called Fixer Upper. What many of you don't know, or some of you might not know, is that she ran a real estate brokerage in Waco, Texas for many years before she became famous. And that real estate brokerage, Magnolia Realty, was a fixer-upper renovation real estate brokerage. That was a portion of her business. It wasn't 100% of that broker's business, and I don't expect that renovation is going to be 100% of your business. But if you can add an extra 10 or 15% to your gross productivity by becoming an expert in renovation real estate and lending, we appreciate the opportunity to help you with that. Likewise, most of the individuals that are on this screen right now were real estate agents or real estate brokers at one time in their career. And I want to just harken back to my early days. Between 1979 and 1989, I would watch This Old House with Bob Vila. And he taught me how you can take an old wreck of a house and turn it into a stunning beauty. And the house that I'm sitting in right now is a renovation project that we did in Franklin, North Carolina. If you ask me why realtors should be renovation ready, it's because 84% of the homes in North Carolina are older than 30 years old. New FHA and VA conventional renovation guidelines make it easier than ever to qualify a first-time home buyer or an experienced real estate purchaser with a renovation loan to put the mortgage into the house and then add on the renovation above the purchase price. That's a new phenomenon that some realtors I've met in Western North Carolina specifically had no idea that that product even existed. So expanding your buyer's options and opening up new conversations about new listings that they wouldn't have normally looked at, and assist clients in building wealth, building instant equity. As a real estate agent, you can really differentiate yourself when you could show them a $275,000 house, lend them $330,000 and have them build a $400,000 house. That happens in real world, real life right now. When we finish today, you will gain access to prepared social media content directly from us relative to certified renovation real estate professionals. We want to give you some powerful video scripts and challenge you and encourage you to leverage the power of video with your face, your name, and really bring out the guru in you so that you can become a social media influencer at any age, at any level of experience. It doesn't take a television star to read a teleprompter into a camera. I can tell you it's very, very comfortable and easy flow. If you're not comfortable getting into the video scripts in front of the camera, we can partner with you to build AI video technology that's new to our company, but has an opportunity to create a video that you're not featured in, but you have contact information and your photograph maybe is in it, but you don't have to do the speaking. I absolutely implore you to get involved with video scripts on social media. It will be a boon for your business, but if you don't want to go that route, we can partner with you on AI video builder technology. We're also going to help you personally and professionally. We want to be involved. We want to talk to you about your renovation clients. We want to pre-qualify your renovation clients. We want to go visit the houses or at least look at the photographs of the houses and the inspections from the houses to help you decide which renovations are mandatory, which renovations are required and or desired, and then which ones are luxuries. How do you ABC your renovation and design consultations? When required, whenever you're borrowing more than $35,000 above the sales contract, you have to get a HUD consultant. And that is a hire that the borrower has to make. A HUD consultant is a liaison between the mortgage bank, the borrower, and the contractors. They assign a HUD consultant whenever they're investing more than $35,000 above the sales price. That's just a rule of thumb. We're going to issue you a certificate of completion. And last but not least, you're going to be able to brand that powerful renovation real estate insignia to your social media and your websites. I want to talk about our sponsors for just a moment before we get into the nuts and bolts. HeroBenefitsNetwork.org is the fundraising industry inside site for first responders, essential employees, and veterans. They receive homeownership and relocation grants from the Hero Benefits Network. They average between $3,000 and $5,000 when they buy a house, and they average between $6,000 and $10,000 when they relocate. And that means they're listing a house with you and then buying another house from you. This is for doctors, nurses, firefighters, law enforcement officers, teachers, EMT, EMS, and 9 total categories of essential employees that qualify for these grants. My father was a police officer. My nephew is a police officer. My brother is a deceased Marine who died just after service in a PTSD related suicide. It was a horrible time for our family, and I'm very good friends with a family that had a fallen law enforcement officer that was shot and killed, and he was only 27 years old. If you don't think that these categories deserve special care and attention and rewards for their service, then you wouldn't join the Hero Benefits Network. But I believe that they do, and we operate. I'm a volunteer for a 501c3 charitable organization. It is free for real estate agents. There's no monthly fee, no annual fee. You can sign up for free. You can get certified for free. Realtors are never charged to be a part of the Hero Benefits Network unless they want to upgrade to different levels after they join. That's a choice, but a realtor can join for free and there's no cost whatsoever. America's Essential Employee Relocation Company is what this organization is becoming. I also want to introduce my new employer in North Carolina. After 20 years of working as a realtor relationship manager for one of the largest mortgage lenders in the country, I had 90,000 realtors in my care as a realtor relationship manager for a large company. We operated a real estate productivity platform that realtors joined, and now I'm with CMS Mortgage as a loan officer, and I'm here to lend wholesale mortgage in North Carolina. So we have access to wholesale mortgage lending partners in North Carolina. We just beat a rate for somebody by a half a point. We just lowered a payment by $180 because they went to a retail lender and then they came to us. So you can test our rates, see if your customers qualify. If you have a first-time home buyer, we do work with NC Advantage and other down payment assistance programs. If you're selling a second home or a vacation home or a short-term rental, we have special financing for those investors or vacation homeowners with or without income verification. Now, not everyone qualifies without income verification or even with verification, but there's an opportunity for us to talk to those self-employed personnel or people who live on tips who don't have income verification. Jumbo loans, we can compete with your bank at every price point, and we may expand your borrower's options. And last but not last, but the new phenomenon is closed-end home equity loans that are fixed rate in nature. If your buyer qualifies, they can buy a home before they sell their big Florida house or their big Maryland house or their big Georgia house. And they can take a HELOC to bridge that gap between before they sell their other home. What I'm here to talk to you about today is a specialized division where we can write reverse mortgages, including the new phenomenon of reverse purchase mortgages, where a family can move into a home and never have a payment for the rest of their life. Construction loans are big now because inventory shortages, at least on move-in ready homes, and renovation purchase mortgages, which we're going to talk to about. So I just want to encourage you to jot down that phone number and my email address, because we can be a guide. Even if they don't qualify today, we can be a guide for any borrower towards home ownership. If it's a 6-month strategy, a 1-year strategy, or a 3-year strategy, we can guide that consumer towards home ownership. So we're really eager to partner with you as real estate agents inside and outside of the renovation lending sector. If you are a realtor and you've been showing somebody houses for 2 to 3 months and you can't find a house for them, let's open up some more some more inventory that produces more equity for your borrower. Okay, distressed, abandoned, rundown houses, houses that need a septic, houses that need a air conditioning system or a total rehab. Those houses used to be available only to cash borrowers, but now we can put those cash buyers, I should say. Now we can put those 3.5% to 5% down buyers, FHA buyers, VA buyers in renovation properties that have no appliances, broken, leaking roofs, no air conditioning, needs TLC. We can still lend on those properties now. And if you've been in the real estate business for more than a few years, you remember that you could not get a loan on a house with a leaking roof. You could not get a loan on a house with wood-destroying organisms. And frequently you couldn't even get a house with an FHA loan without appliances in the house. So now we've grown up as a mortgage industry to include renovation real estate as a primary product in older homes. You don't have to be handy. Your customer doesn't have to be handy to buy a handyman special, because with the right due diligence, the right inspection and repair clause, the right appraisal contingencies, we can hire licensed contractors to do the work, and all they need is a little bit of creative imagination and professional guidance. Remember, if it's under $35,000, it can fit into the FHA Limited program. If it's over $35,000, we'll be assigning a HUD certified consultant that is going to work between your borrower and the contractors that you introduce them to or that they meet on their own. We have a list of contractors, and you can find contractors on your own and nominate them to renovation lending opportunities. A lot of you are so frustrated with existing home sales that you're moving to new construction. Well, that's a viable alternative for a lot of buyers. It does take 12 to 18 months to buy and close. We can usually do a reno project in 2 to 6 months. Offer lower upfront costs usually than a new construction. And you're buying in a neighborhood with mature trees and established neighborhoods that might be closer into town or maybe a better location than what you've seen. But my favorite feature of renovation lending is absolutely the equity potential. Immediate equity achieved from a renovation product in the mortgage industry, whereby the consumer buys a $300,000 house, takes out $350,000 loan, and has a $400,000 house at the end. Now, that doesn't happen every single time, but I'm telling you guys, this is real, this is genuine, it's holy, and it's definitely making a difference for a lot of our realtor referral partners across the state of North Carolina and beyond. Renovation real estate can be rewarding and fun. I can attest to that because when my daughter was at Loyola University in New Orleans, my wife was homesick for her daughter, and she bought, without my blessing, mind you, a $107,000 shack. It was a shack. It was a abandoned shotgun house in a neighborhood with $1 million houses in it. true truth. There were $1 million houses on the same block. But she was able to buy this house for $107,000. We put $65,000 in renovation, and we sold it for $285,000 when my daughter graduated from college. It was pretty inside. I did not pick that purplish blue that we painted that house in New Orleans, but I did cash the check for the $113,000 in instant equity that we grew in that property. So if you see case studies like that we're going to show you, this would have been a perfect FHA limited product in western North Carolina, in Macon County, in a little town called Franklin, North Carolina. We had acquired this house, and before we started renovation, it was estimated to be worth about $190,000. We did repairs worth $30,000. We put all new decking and expanded the deck. We increased the size of the closet. We added a little bit of TLC and some kitchen cabinets. And we were out of the repairs for $30,000. Just adding the deck and the kitchen cabinets and a little lean-to addition to the closet to expand the closet space. And we ended up with at least $60,000 worth of equity right off the bat on that project. And I'm sitting in that house today. It doesn't look anything like it did the day that we acquired it. And I'm proud to say that we added a great room on. We expanded the deck even further, put in a sunken jacuzzi, and we've got a view of the Wyabald Mountains and the Standing Indian Mountain Range. It is a stunning small property for just my wife and I. My kids are all in college or out of college. But we do have an opportunity to show your consumers what renovation can do. We're going to get into a couple of case studies. I'm moving fast here because I don't want to keep you any longer than I have to. But you can reach out to me via phone, via email. You can text me. I am available to talk to you about your plans. And I want to simplify this down to its core. All we're doing is buying a house at one price, but lending you more than that to complete your renovations. So whether you take out an FHA 203K, or you take a VA reno, or you take out a USDA reno, or you take out a conventional reno, all we're really doing is adding on the cost of the renovation. So these are some real examples over the years that we've been doing this. This was a $1,283 monthly payment the way it sat. It was a $1,405 payment the way she wanted it. And trust me, that kitchen was a knockout compared to what it was when she moved into the house. This was an unfinished attic in a house she was buying for $1,854 a month. Along with some other improvements to the house, she ended up paying $2,025 a month. But that's a simple breakdown. That's like the simplest way to explain this. You can buy this house for this much. You can have the renovation done for this much. And if you ask the client if they'd rather live in the house on the left for $1,701 or the house in the right for $1,901, you're starting to see why that $200 a month is a heck of a deal in a renovation project. She had to add a driveway. She had to paint, repair many of the windows, replace a few, and it became a much, much more beautiful home. Now, the same color scheme, we're talking about just some painting and some other things. It would have taken the payment from 15 to 18 and a quarter. So these are not just for auctions and foreclosures anymore. These involved other distressed, vacant, divorce, and estate sales, not just for REO bank owned. Okay, that's one of the questions on the quiz coming up. This is not just for REO bank owned, although you can use a renovation loan to buy a foreclosure like that one that was active on the market when I was preparing this just a couple of days ago. Myth that auctions and foreclosures and distressed properties that need to be rehabbed are only for cash buyers. That was the case when I was selling real estate from 1986, and I'm still a licensed real estate broker today. The rich can get richer. That was the only way it could be. But now Some of the banks actually incentivize owner-occupied purchasers in their portfolios. They want to allow owner-occupied consumers to buy these houses. That's where renovation real estate and lending comes in. Now I'm going to walk through this exact example of this house that we've sold. It's under contract today and it's closing September 15th. This house had a leaking roof with a visible tarp on it. You cannot ask for a worser eyesore than a leaking roof with a tarp on it. It had active live termites on the wood destroying organism report. The seller had no money to fix this house, but she wanted out of this house. And the buyer only had $10,000 total cash that he was willing to invest in buying his house. Now think about that. How's he going to get a new roof, termites cleaned up, tented, probably some extra cosmetics, and there was an electrical problem on this house as well? How the heck is he going to do that if he only wants to invest $10,000 total cash to close? Well, his credit score was above 620. In fact, his was much above that. And he had verifiable income for 2 years of employment, more than 2 years of employment. We took his total estimates for repairs and we totaled them up to be $29,000. And the magic number is $35,000. As long as we're under $35,000, we can do what's called it used to be called streamlined, but now it's called a limited FHA 203K reno mortgage. So what's 3.5% of, well, I'm sorry, 3.5% of $220,500. He was required to put down just over $7,000 of his own money. We got the seller to pay some closing costs. So the buyer's total out of pocket was $9,000. We raised the price to $23,250 so that the seller actually bought down the rate. And I won't disclose the final rate to you because he did pay a discount. He invested a little bit in a discount point to get a number that he was more attracted to, and his payment went down a little bit. But I'm talking about now, not every borrower is going to qualify for this, and I want to give adequate disclaimers that were on that CMS mortgage slide earlier. But this is how wealth is built, okay? If you've got a buyer above 620 with 2 years of employment, they don't have any judgments, we can verify their income, they don't have too much debt, there's a way to put together a renovation project for that buyer with as little as 3.5% out of pocket. So again, not every borrower qualifies, and I can't do every project, but this particular borrower got between $85,000 and $110,000 in instant equity when he closes on September 15th. I've heard since that this house was sold, but I saw it as a renovation project at a barn dominium that we could buy for $125,000, renovate for $60,000, maybe even add a lean-to on the right there to expand the square footage, and be all in for $200K. I do a lot of work with Hero Benefits Network, and I work with a lot of essential employees that can only buy $170 to $300, and I'll tell you, it's really hard to go out and show properties under $200, but if you or at $200 or below. But if you saw a house, a single family home, you could put mini splits in, you could paint it, you can add a covered patio to the front and expand that deck, you can add a lean-to on the right side and grow the square footage of the house, all for under $200,000, and this house included a 2-car carport. Here's another one in North Carolina that was $145,000. We did an analysis of it, and it looked pretty simple without doing the due diligence, and I'm not quoting this. On August 15th, we perceived that we could add a bathroom. We perceived that we could add a laundry room and a pantry. Now, there's an inspection, and there's a HUD certified consultant that has to be in between us, because if we were going to do $55,000 to $60,000 in renovations to this house with a large covered patio and a new tin roof, he would have to approve that those were the specifications of repair, including potentially a new roof. But you could certainly see how this house could be had and upgraded for under two and a quarter. And I haven't seen too many active listings under 2.25 that would be as beautiful as that house would be after renovation. My favorite project that I found this week doing research for this class was in Cullowhee. It was a house on the bottom right-hand side of your screen. It's probably sold by now, but it is a disaster. Covered with kudzu, been abandoned. It's $175,000 3.2 with a 2,200 square foot footprint. It's right on or right off the campus of Western Carolina University, so perfect for housing a professor or a coach, and certainly any administrative staff. Or if you wanted to turn it into a rental one day, you could probably put some students in the 3.2 for, oh God, I'm paying $650 a month for one bedroom over there, and I'm sure the rents are higher for the single family homes off campus. This one was special to me because this is a project that I would have gotten involved in had I not be open in other projects. In Sylvan, North Carolina, there's a 6-acre property with 2 streams. It's been on the market for 415 days. It's a 1904 farmhouse, about 2,400 square feet. But the thing I liked about it is it had a 2-bedroom, 1-bath house attached to it. So you could live in the 2-1 while you're renovating the big house. Quite simply, the appraised value of this finished product, in my layperson's estimation, I'm not even going to call myself a real estate broker because I'm not licensed in North Carolina, but I am an avid real estate investor, and I've been, in my opinion, the future renovated appraised value could be well above 600, 650, 700,000 on this 6-acre parcel with 2 streams and 2 houses on it. A lot of families might consider turning that 2-1 into a rental unit. Others might just use the farmhouse and keep that as a guest house. But suffice to say, if you put in an offer and you added the renovation expenses, it's not uncommon for $150,000 to $200,000 to be lent on a renovation if the future appraised value will support it. And that's why you need an appraisal contingency. I'm done with my case studies. And for my friends who want to graduate from your real estate, residential real estate renovation and lending certification, we run a North Carolina real estate productivity platform that hosts classes like this frequently for realtors. And there's never a charge for any of our classes, but frequently we'll add a quiz to make sure you are paying attention before we issue your certificate of completion and or your insignia and release the social media content to you. There's no cost whatsoever, and there's never an obligation to do business with CMS Mortgage Solutions, but we are here to solve the problems that you're facing as realtors, and I'm excited to get to know you better. The first, in orange, can a renovation include septic? The answer is yes. FHA 203K Limited is usually non-structural in nature, but you could do some structural work as long as the total was under $35,000. You would have no HUD consultant required. The money would be put in escrow, paid directly to the contractor 5 to 7 days after closing, and then the balance of the 50% would be paid upon completion of the project. So your contractor needs to know that he's getting paid in one lump sum, 50% in the beginning and 50% at the end. And this is all contracted, all licensed contractors. They've got to have good references. So a project that you can buy for $285, you can easily get a mortgage for, not if you qualify, your borrower can get a mortgage for $320,000. Do not include the renovation budget in your contract. Write the contract for the purchase price only. In orange, that's going to be on the quiz. You write the contract for the purchase price, and then you add the renovation budget into your mortgage application, not into the purchase price on your contract. When we look at this house on the right, I would assume it would need to be an FHA 203 key standard or conventional home style product. It's not proper for an FHA 203K as a case study. So there would be a HUD consultant required because it would probably be about $100,000 to take that up to 275 and make it maybe worth 350 to 400,000 if it was done right and I'm even close to the appraised value. But I'm not making an appraisal. I'm just telling you what my experience has been in residential real estate renovation. There's a thing called specification of repairs. Some people refer to it as a scope of repairs. When it's a HUD consultant involved, there's 3 draws to get you to 30,000, 4 draws if you're going up to 50,000, and then 5 draws that your contractors have to wait for to receive the money. So you need to be clear with your contractors about those draws and when they get their money. But suffice to say, the scope of repairs is created with the borrower and the HUD consultant. We'll see if we can get a few more facts in here before we wrap up for the day. I'm nearing the 30-minute mark and I'm trying to get under it. 3% is the minimum down payment on a conventional product if they're a first-time home buyer. 5% if they're not. FHA reno is usually 3.5%, and you can do up to 1 to 4 units. VA reno, if your VA eligibility certification is up to date, you can get a 0% down payment even on a reno. If your client wishes to finance 80% or less of the reno project, they can avoid mortgage insurance and they can opt out of escrows. It's just something for you to know. You can do secondary and investment properties. You can build a pool, and you can do one of those fancy Bobby Flay, Guy Fieri outdoor kitchens that you see on TV. So just wanted to let you guys know that. Roof, HVAC, water damage probably would not qualify for FHA limited because of the $35,000 limit. Writing the contract do not include the renovation budget. Now this is on the test. It's true that the scope of repair or the specification of repair is broken down into 3 parts. I referred to it earlier: mandatory, recommended, and desired. So when a HUD consultant sees the property and works with the borrower, of course the borrower is going to have dreams about what they desire, but there's going to be certain things that are going to be contingent upon that they have to be fixed as part of the renovation loan. Those are the mandatory. The recommended by the HUD consultant, and then the desired. What does the borrower want? So that's what limits the amount of the loan. You know what I mean? Like they won't go over a certain amount if the future appraised value won't hold up. Your contractors do need to be well funded, and they need, meaning that they have to have enough money to wait for the payment, right? So it's not like you can dole out money to go buy materials and then dole out money to pay for their day labor. And they do need to provide references, but there is a question on the quiz. They do not need a backhoe. I don't know why that's on there, but they do not need to own their own backhoe. If the backhoe is needed, they can rent it from, like a McNeely or a different equipment rental company. Couple more facts before we wrap up. Yes, you can write a reno loan on mixed-use residential commercial. You can write reno loans on 1 to 4 units and single-family homes, but you cannot write reno loans on apartment complexes. You can convert a single-family home back to a multifamily home or from a multi-home back to a single-family home. No flips are allowed. You have to follow the lender guidelines on when you can resell the property. With my New Orleans property, for example, we did the renovation in about 6 months, and we kept it for a year or 2, and then we sold it. We're not allowed to do any apartment complexes in renovation lending. I want to do one more commercial for America's nonprofit Essential Employee Relocation Company. I want to remind you of the site that you can visit to learn about this philanthropy. HeroBenefitsNetwork.org is where realtors and title companies and mortgage companies can work together. And the next step in our relationship, if you'd like to take it, is to take your 10-question quiz, print your reno certification, And then I would like to be in contact with you personally about the social media content, the videos, and the video teleprompter scripts. Just want to thank the Hero Benefits Network for the work they do with essential employees and first responders and veterans across the state of North Carolina and beyond. And I want to thank CMS Mortgage for bringing wholesale mortgage channels to the North Carolina realtors and their borrowers. I'm really proud to be with this company because I can be very, very competitive on rate against some of these retail distributive branches and some of the retail banks in town. So thank you very much. If you scan that QR code, it'll take you right to the quiz. And last but not least, that's what the certificate of completion looks like. I used to bring it into every listing appointment and every buyer presentation the entire time I was selling real estate. And that's from 1986 until today. I still have a real estate brokerage in Florida that still closes referral transactions for me down in Florida. So if you're open to working more closely, reach out to me. My phone number is at the bottom, 828-482-7659. Thanks for being on.